Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, good morning. Welcome back to another show, and I hope you are doing well. We've got markets towards their all-time highs. You've got some interesting moves happening in the currency world, the commodities world. Gold's up again today. Did you guys see that? I did end up trailing a stop on gold a little bit. Oil still sitting in a break-even trade here, not gone too far in either direction. And I hope everybody's trading safe, trading smart out there. It is hard to believe, but it's almost August. And we have, before August, we have some interesting stuff happening. Of course, we have the Fed meeting taking place the 31st, where some Fed officials believe that we should cut interest rates, but the majority, I believe, are still in the camp of thinking that a rate cut would be more probable, more appropriate in September. If anything changes on that front, in terms of rate cut frequency, if we were to get more rate cuts, the expectation would be dollar weakness, right? Moving lower. And if anything were to change in the dollar story, it would suggest perhaps rate cuts would be put off. That's the big thing driving the dollar, right? Is probability of rate cuts. So we'll see what happens with that. But we did get some interesting data in recent weeks. We had strong jobs data compared to expectations. We also had, of course, cooling inflation. And this combination of cooling inflation plus strong jobs is a very strong environment for, you guessed it, stocks, right? There's a lot of green on the screen. Just take a look at the color blast that I'm about to show you here. When we switch from DXY, right, to SPX, look at the difference in color. We have a bearish chart that can't seem to get out of its own way versus a bullish one, which just keeps moving higher, right? So we'll see, but momentum here seems to be a factor this year in markets. And specifically, there is actually an ETF for this. MTUM is a momentum ETF. And what this, long story short, this thing buys strong stocks and it sells weak stocks. And momentum has done really well, actually reaching a new high as early as May 16th. So momentum's been a factor this year where we had momentum. You know, if you traded this year, let's just put momentum as a factor here through a simple indicator that we have here, the A1 momentum indicator. If we were looking at momentum, we said, look, momentum was down, we're short or bearish. Then we did have one fake out where it looked like it was going bullish. In fact, this was a heartbreaker for me because I was long here. I took an index trade and then got stopped out. But then momentum, again, if we're just obeying momentum, momentum went super bearish and there was a lot of downside. Then again, obeying momentum, we gapped up, we broke out and just kept going. And for the most part, we have just seen momentum staying very strong throughout the majority of this year. You had one little break here, maybe a break there, but I don't think so. The point is momentum has been a really strong factor, and momentum has been the theme this year for a lot of markets. Look at the dollar's momentum. The dollar has been just trending down, but perhaps the dollar index is starting maybe in the early forms of a reversal. We've got a show scheduled here. I do see Tom is in the background. Tom, I think we've got you scheduled at 9:30. But if you'd like to come on a little bit earlier, then you're more than welcome to. Give me a thumbs up if you want to come on a little earlier. I think, okay, cool. Yeah, we'll bring him in just a second. So we have Trader Tom in the building, who I want to definitely talk about the dollar with, about this theme. But real quick before we get to that, let me just finish up by updating you guys on my gold position, and then we'll bring in Tom to the mix. So we have gold here, which is putting in some higher lows, higher highs. And I did actually trail my stop loss in this one. And surprisingly, gold looks very, very strong. I've been kind of advocating for, I think gold is really range bound. It's a little too soon to say, but you are talking about moving to the upper limits of this choppy range bound environment. So the question now becomes for gold, can you get that breakout? That is the big question on the minds of many gold traders at this time. It's almost, a magnet, this level here of 34.40, I think. The question then becomes, can you actually get the break above that level? So what I've done personally is I've trailed my stop loss into profit for a small, if this thing were to completely reverse, I would still make money. Wouldn't be a lot of money, but I'd make something. And what I'm looking for now is higher lows. Any future higher lows, I can take that as an opportunity to trail a stop loss further into profit on this trade. Quick plug before we jump over to Tom. Edgefinder sale is ending very soon. If you're interested in getting 45% off, if you're a regular stream viewer, here's your chance to get a copy of the tool at the lowest discount that we offer all year long. You can get 45% off for a limited time by sending us a direct message using the link being dropped in the chat at this time. So if you speak directly to our support team, they can get you the 45% off discount offer. And if you need to split up the payment into a couple payments to make it easier for you, we do offer that. Just ask us about that when you send us a direct message with this link right here. Okay, guys, we're going to play a quick break here. And then up next, we will be joined by the one and only Trader Tom to take a look at some currencies. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about OANDA. OANDA is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out OANDA, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, Tom, give me 1 second. I'm here. I'm just behind this thing. The producers will move me around just a second.
Okay.
There we go. Hey, Tom, how are you doing?
Yeah, good, Nick. How are you?
I'm
been
good.
A while.
Yeah, it's been a while. It's good to have you back on the show. I love your background, by the way. You look like you're in a true trading room. It's awesome.
Thank you. Yes, I designed that myself.
Yeah, that's awesome. So Tom, what's the latest with you? What are you watching in these markets right now? If you want to share your screen, I'd love to throw some currency pairs at you, see what you think.
Yeah, sure. So yeah, US dollar, like you were talking about US dollar, Nick, and that's exactly what we're going to talk about as well, because like the dollar is, we know it's been crazy weak for a very, very long time. And it, like you explained, it depends on, if Trump gets his way with Fed Chair Powell and they, reduce interest rates, then we can only see the dollar, being weaker over the midterm. But really, from a technical standpoint, it's at some really good levels right now. So if we look at the weekly chart on pound US dollar, we've got a couple of alarms in there. Let me just remove those. Because we can see how, the weekly chart, we're going to start here and then we'll work our way down to the other time frames.
I'm glad you're looking at the pound, because I have a short position. So if you're bullish, go easy on me.
This may not be good listening, Nick.
That's okay.
But it depends on, we still need sort of structure breaks and confirmation to take a buy, right? But the just look how weak the US dollar's been, right? You could look at pound US dollar, you could look at euro US dollar. They all look like this, right? The weekly charts have been storming. US dollar's been super weak. And what we're seeing now is pound US dollar at a very nice support level, right? It's touched it once, twice, and it's at this level again. Now, the weekly is at a buying level. It doesn't mean I want to buy the market, right? I'm going to look at other time frames and get an idea of what I want to do from there. But we have literally yesterday had this very nice bullish candle form from this bearish area. From this support area.
Yep. Right.
So buyers for me have taken control of this market. And I think they can take the market to potentially 1.355 or even up to 1.36. I generally aim for psychological levels. So because of this bullish reaction and because of the fact we broke H4 structure as well, as you can see here, price was coming down. We just ranged like it normally does when we find a support level, right? The market doesn't know what to do with itself. And we've had this, consolidation, if you like, on the H4, and now we've had a break out of that level. I think there's some room to the upside with pound US dollar. And it's a similar picture with euro US dollar.
Yep.
So if we take a look at that as well, so if we go to euro US dollar, exactly the same, right? We know the US dollar's been weak. And the weekly chart, has just, and that's also combined with euro's been very strong, right, for a long time as well. And then we're at a great weekly level, right? You can see this was once resistance, is now support. Will it want to make its way back up to these highs, right? Now, if we drop down to the day chart, okay, you can also see at this level of once resistance support, we've had a very bullish reaction at that level as well. This is less clean cut for me than the pound, because there is this wick here, right, that I would like to see broken. And then if it's going to do that, then then we can make our way back up to here. Sure. But we need to drop down to the H4. And you can also see here, right, we've had a H4 structure break again. We found our way back down to this support. The market gets a little uncertain when we find a big support level, but buyers have pushed this higher. You can see an alarm in here. I won't necessarily start buying from here, but this whole area I'm interested in. When the moving average 20 comes round, I think this could be a good technical trade to take price higher. So yeah, that's what I'm seeing with the US dollar.
Yeah, so the dollar itself, to your point, has just been in a monster downtrend this year.
Yes,
it's been kind of a crazy one to watch here, in terms of specifically, we had this huge push up towards the end of last year, and then completely reversed this with all the tariff uncertainty and with cooling inflation. We've seen a real big longer term kind of thrust lower on the dollar index. The question I guess I have too is, what in terms of a technical basis would you be looking for to show us that the dollar index may actually be reversing higher, right? So in this situation, right? So obviously I love the chart markup. You've got pound dollar, right? Which nailed that support level. I actually thought we were going to break through it. In fact, I looked at this thing and I said, okay, looks like we might be trying to break underneath, and nope, it shot back higher. So bulls are definitely still in control of this market. You've got a nice overall, hitting support, holding it here. I use a bit of a dollar cost averaging approach when it comes to FX, Tom. So I have a small short position here with willingness to potentially add another one here. I think that my timing in terms of FX is less important to me than more so just general longer term direction. I think that the pound could actually make a push higher and beyond, in which case I could build some longer term short opportunities against the dollar. So I'm not really super short term or timing focused, but in terms of this support level, right? Clearly Buyer stepping in, looks like it could be making a push back up here. But what would you be looking for? Because I know a lot of people here, they trade gold or they trade currency pairs, or they even consider the US dollar in their analysis of indices. We've got a little bit of everybody in the audience here. From the dollar's perspective, and maybe the easiest way to do this would be to talk about the dollar index at the DXY. What are your thoughts here on the dollar index? What would actually show signs from a technical perspective that the dollar index is reversing stronger? Because I do think I'm with you. I think in the short term, the path of least resistance for the dollar index still seems to be down, right? The downward trend still seems to be in control. We haven't had these huge breakouts the other direction. We're not seeing some sort of higher low, higher high sequence. We're really still seeing a lot of red on the screen, right? A lot of bearish pressure. So what tells you, and maybe so that the audience can kind of think through this themselves, which is ultimately what we're streaming this for, is for people to think about this themselves. What gets us to change perspectives on the dollar index? What would have to happen to get you to change your analysis on the dollar?
Okay, so I mean, if normally I would work from the weekly chart down and technically analyze every time frame and build a picture of the dollar index, right? That's how I trade. I just collate data basically from each time frame and make a decision based on that. Now, I wouldn't normally go as high as the monthly, but if we look at the monthly, it's looking very bleak for the dollar, right? If you can see my chart right now, we've broken this, support level here, which was at the 100 level, which is no surprise, right? The 100 level is going to be a big psychological number for the dollar index.
Yep.
And I thought if that holds, the dollar has some hope. There could be some strength coming up from this level. And there was signs of it. We got a bit of a kick up at this level, and we'll look at that on the lower time frames. But as you can see, it has just absolutely blown through that big psychological $100 level.
Yeah.
So, that concerns me for the dollar, right? Maybe retraces into this level and a move lower. For me to start seeing a more mid to longer term strength coming back into the dollar, I would need to see a break above this 100 level. Let's say price comes down to here, we get some price action like this. I would like to see price bounce above that 100 psychological level.
Yeah. Now,
that's the monthly. I wouldn't normally go as high as the monthly, but that does paint a pretty bleak view of the US dollar. And it's coincided ever since Trump's come into control. He's just single-handedly killed the dollar. It's like the dollar killer. Anyway, but yeah, I mean, weekly, if we just look at it from a structural point of view, it's in a downtrend, right? And here's that 100 level again. So for me to start seeing US dollar strength, I would want to see at least a structure break on the daily chart, right? Because we started seeing it here at this 100 level, and that's what I was speaking about, right? Price come down, price was just flirting around the $100 level. Then we got this structure break, and I used the moving average 20 to help visualize that as well. So this blue line here, you can see, if price is above that, right, we're looking for buys. I also need to understand structure of the market. But once price came back into here, we could have expected a kick off from this $100 level.
Yeah.
But it just never happened, and ever since then, we haven't had a build up in structure ever since, right? It's just been a downtrend ever since. This was kind of a little bit of hope here for the dollar.
I like that that $100 psychological level that you're talking about, because it does make a lot of sense, right? And it's visible on multiple time frames. So I think that everybody, listening should acknowledge or see this, whether you mark it up on your chart or just psychologically take note of this, right? You have the 100 DXY level really acting as a very longer term level, a psychological level, if you will. You can see price came really close to it, turned it around on the dime there. or not on the dime, but pretty close, right? And then it came down here, tested that area. So it clearly has been historically a pretty big area. We saw the 100 level get tested from the low side in 2020, then proceeded to drop down. Took it back, found support. So it is this big psychological level. So I do think that's actually a really great way of phrasing it in terms of how do we see dollar index strength? Well, a sustained move past the 100 level. You know, you can kind of see we tried to move higher here on the weekly chart, failed out, reversed, and moved lower. If we were to see from a strong dollar bullish perspective, what I think I would also need to see, I really like that analysis of the 100, would be taking out that 100 level and confidently staying above would be a really strong start in terms of a longer term bullish perspective on the dollar index. As long as we are not there, right? As long as we can't take back that level, you know, the dollar index in the meantime still looks like it's got struggle, right? Still struggling to hold any sort of level of support. Although the one thing I will say about the dollar trade here is that we've seen, you know, momentum has slowed. So I do think that, you know, not to get too fundamental during our segment, Tom, but I do think that we would need to see some sort of fundamental catalyst come back into this market to really get things going. You mentioned, of course, the Trump tariffs, a dynamic there, causing some serious change in trade dynamics globally and threatening that that dollarization globally, right? There's been a little bit of a challenge to that. You know, how much can people trust the U.S. and you know, if trade can be kind of ripped away from countries, maybe, you know, a little less reliance on the dollar is a popular theme right now. It certainly seems to be. But we've recently seen, you know, things kind of slow down on that department. We've seen most trade deals seem to move in the right direction to an extent. So we're seeing sort of a choppiness in the dollar index now compared to that huge momentum lower. So if you're going to get a true another leg lower, which by the way means a lot to the gold traders and to the currency traders, because obviously a weaker dollar would likely lead to stronger, you know, gold movements, etc. If you're going to get this, the big question, the big thing I would be looking for specifically on a fundamental catalyst would likely be really soft jobs data. We talked about that at the top of the show. I just wanted to throw that in there. To me, right now, you have inflation, which looks mixed to cooling. It's not, you know, it is cooling generally. So, you know, inflation's heading in the right direction. But what's been holding up the dollar, I think, has been strong labor data. That's kind of what resulted in this rally here that we've recently seen, although small. You know, I think what you're going to have to see would be slow down in the economy, right? Slow down in jobs would get the dollar to really tank below the 90s in my personal view. So if you're going to get that bigger push lower, those would be the fundamental catalysts that I'd be looking for. From a technical perspective, like I said, I think momentum has gone from this clear, obvious, strong downward trend to more of a slow and steady downtrend, which is still a downtrend. But I think you have the potential to kind of go in either direction from here. Fundamentally, I'm pretty mixed on the dollar, so I don't have a very strong bias one way or the other. However, that brings me to you know, what I was talking about earlier, Tom, and I want to get your thoughts on. We've got a couple minutes here before we're going to take the show on to our next guest. But I wanted to get your thoughts on gold, because obviously with a weak dollar, we've seen gold really erupt this year. Gold has been in a massive uptrend. It's probably one of the biggest winners in terms of major assets of the year. Ethereum and Bitcoin might take the lead there, but gold has also done really well off of a weaker dollar. What are your thoughts on gold? Are you bullish? Do you have any positions? What would you look for possible trades?
Yeah, well, first of all, if you own any gold, sell it. No, I'm only joking. But, you know, gold is just on a crazy upward trend, and it has been. But, you know, we've seen some clues that, you know, has it found its ceiling? And again, you know, we're looking at the weekly chart here. You know, you don't need me to tell you. I mean, just look at that trend, right? It has been flying. And it seems to have found a bit of a ceiling, right? It's got this level here that has proven to be very good resistance for gold, right? Now, the big question is, will it break through that, or are we going to find sellers at this level again? Now, excuse me. Now, that's what we're seeing on the weekly, but ultimately, bullish, and we still have room to move into back up to these highs. And then if we look at the day chart as well, we have had a nice, I was actually looking for a gold buy today, and you have to bear in mind our time horizons are quite different, right? I'm an intraday trader.
Yep.
I'm looking to get in and out of gold in really this space here, pretty much, right? So I really like the setup for gold. I just didn't quite retrace into a value area for me. But, if we just track the structure of the market, right, we become an uptrend again, right? We was in a downtrend at this point, but this key level here got broke, further US dollar weakness, gold strength, and we had this nice big super bullish candle. And I love this for a setup when you get a nice bullish candle, break through a key resistance level, and then I'm just looking for a retrace into here. So right now, bullish, but not in this trade. And I would take price back up to here. But, from a technical standpoint, I wouldn't like to push any further than this right now. I would take profit at this level.
Sure.
It keeps telling me that sellers are at that level, right? So I'm not going to push gold, and you were explaining you were in a gold trade, Nick, which I totally like. For me, I would take some profit off at this level. And just to sort of, clarify my setup, this is what I would have been looking for today, right? We got this H4 uptrend. We had, I was just looking for a nice pullback into here. Didn't happen, didn't get into the trade, no problem. Don't suffer with FOMO, although looking at that candle, maybe I am. And, price has just shut off. But yeah, really like this trade in here. Would I re-enter this trade? Perhaps, right? If the H4 candle stays like this and we get a move back to this level here, stops below here, I would still look to potentially get in on that gold trade. So I'm very much looking to buy gold. But like I say, pushing it past this level, again, as you said, Nick, really depends on how that dollar's going to unfold as well. And I totally agree with that dollar index downtrend. You can just absolutely see is slowing down, right? If we go to
and I think that momentum theme that we just got done discussing with the dollar index, right? Momentum slowing does not necessarily mean it has to reverse either, but same thing has been present on gold, right? You've had this momentum that was so obvious, so dominant in the early parts of 2025, and now we've had this sort of grindy sideways to upward trend on gold. These are two different market environments. And, you mentioned being more of an intraday trader, right? Getting in and getting out, scalping or scalping in and out. Are you more of a scalper or a day trader?
Day trader, really. Okay. Yeah. I normally enter on H4, H1.
Got it.
Yeah.
And you're looking to play that zone to zone. And so,
exactly.
Which is great if you can kind of spot those levels like you just got done discussing. You're dropping it down to the 4-hour chart. You're looking to trade that zone to zone. And then again, this is the cool thing for the audience is, there's people in the audience who are more swing traders, day traders, scalpers. We have a little bit of everybody who tunes into these shows. And so, Tom may be taking this, like, let's just say, for example, he caught this move. He's in there. He's looking to kind of take that slice, which is a nice move on gold, and then move on. And, then you have traders like myself who I bought the low end of this range in a weekly chart upward trend with the idea of putting a stop below here and holding it for weeks if I need to see if I can get a move. For me personally, I'd be looking to move past this and continue to trail stops until I get taken out. And that's the beauty of trading, is there's many different ways to make money in markets. Some are shorter term in nature. Some are, let your winners really run for an extended period of time, which has its drawbacks too. Or you can kind of get in, take your profits, move out, and do it over and over. And that's the cool thing about trading.
Nick, would you take, once it gets to that resistance level, would you take some profit off your trade or not? You just let it run?
Yeah, so that's a great question. So when it comes to partial profits, for me personally, I don't take partials. However, trailing stops in a way kind of have a similar equity curve or result to taking partials. So for example, if we get this move up to this level, and let's just say, for example, we do this. If this were to take place, what I would do is I would take that stop and I'd move it up here. On the higher high, I'd trail that stop further. So I'm all in, all out with my positioning for the most part. I do sometimes add to winners, but primarily I'm just trailing a stop on a move like this, and I'm trying to play for the big one. So what that means is I may give back these gains, and that stinks when it does. But every once in a while, I'll also catch this full move with a full size position. And again, this is where it's like some people take partials, some people take it all in, all off. Some people do 3-to-1 risk rewards, 2-to-1, right? Some people scale in, scale out using dollar cost averaging. There's all sorts of different ways to approach it, which I think is the beauty of markets, is you can kind of find your niche, find your specialty, and just play it over and over. But for me specifically, I like to trail stops and be full size in, full size out. And you like to take a little bit more partials.
Yes, I would still, even though I'm trading that gap, just from there to there, as you explained, I'll take partial profits at that level, anywhere from like 70% to 90% of the trade. And then I'd let 10-20% run and then trail the stop from there, and potentially use that 80%, 70% profit that I've taken to put back into the trade as well if we get a retrace.
I love that. So, and that's the thing is, so, there's people who will do, take half off. I know that's a big popular one, is or take 75% of the trade off once it hits major level, but then let something run. And so, for audience listeners, there are many ways to approach your exit strategy. What I would encourage whatever you do to make sure that you test it, to do back testing or demo trading, just to make sure that you're comfortable with it. There's also a psychological aspect to it. Some people like to kind of close out a piece just to reduce the risk, reduce the kind of pressure of the trade. And then they can feel a little more, that last 10%, 25%, whatever you leave running is a lot more. It's like, oh, if it runs, it runs. Otherwise, I'll just take a small loss on it or take a small profit on it.
Exactly the reason, Nick. You almost need to know your weaknesses as a trader. And I struggle to let 100% of my trades run. I really do. So literally the next resistance levels or support levels are always my targets. I take profit, and then, like you say, it is a bit more of a relaxed mood, and I can always add back to the trade. But that's totally what I do.
I love it. Well, Tom, before we move on to our next guest, I just want to make sure if anyone wants some good technical Forex analysis, to make sure to go check out Simply Forex on YouTube. Here is the link. We just dropped it in the chat. You can find Simply Forex on YouTube. You can find Tom's YouTube channel. And guess what? It comes with a great accent for you guys. I know everyone comments all the time, Tom. They love your accent. So
I'm really American, Nick. I just put this on.
Well, you're doing a really good job, because I can't tell. That's awesome. Well, Tom, thank you very much for coming on for a little bit and talking some charts with me. And we will see you on the next one.
Yep. See you soon, Nick. Thanks a lot, mate.
Yep. See ya. All right, guys, we're going to keep pushing on here. We've got our next show host. You guys know him very well. It is, of course, Forex James, going to be joining the stream in just a moment. Real quick plug before we do that. Remember, Edge Finder sale is ending soon. We are currently offering our biggest discount of the year. It's 45% off for a limited time to get a copy of the Edge Finder, which is our primary market scanning tool for fundamental analysis, sentiment analysis, and technical reads that matter. I saw somebody earlier saying, Nick, why are you focusing so much on technicals today? Technical analysis always plays a role in what I do. It is not the only thing that I view. And what I find is, to be honest, most traders who watch these streams spend, a lot of their time watching a lot of different creators who do, all sorts of different technicals. And what I think is kind of my specialty or my niche on YouTube is really talking about what I know a lot about, or I think I know a lot about, not compared to some, but compared to the average trader. Fundamental analysis is kind of my thing. It's kind of my specialty that I believe I bring to the YouTube space. Now, of course, I'm not the only one, and you're about to meet another one who does some great macro and fundamental analysis. You've got Forex James coming up just after this quick break. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning, good evening, good afternoon. How's everyone doing? I hope you're well and enjoying your Tuesday so far. So we just had New York open. We've got the Dow up and NASDAQ down, which is interesting. So it seems like Dow is leading the way today. But let's not focus on the short term just for now. I'm looking to sell pound dollar, one of the major currencies in the markets. Something that brought this to my attention was the Edge Finder. Then I decided to pay attention a little bit to seasonality. And anyone that watches me relatively frequently will know that my opinion on seasonality, specifically with major currencies like the pound, like the dollar, the euro, it's relatively unimportant, and that's because it doesn't take into account things like monetary policy or any of the economic or geopolitical landscape. But this is from Season AX, which is a historical or seasonal program for all markets. But anyway, if we look here, pretty much towards the end of July, and I don't have a Season AX membership anymore, so I can't see the exact date, but it looks towards sort of 23rd, 24th, 25th, etc., into pretty much the end of the year, towards November. And again, this is 45 years worth of data. It's extremely bearish. So the technical plan so far is I've got an alert set here, which is at 1.36233. Now, there's no real reason for this level. It's just it kind of looked good to me. You know, we've got a minor previous high here. We've got some lows. So I was thinking this might be a nice level to get in. Stop loss at the daily high. And this is accounting for the rest of the seasonality and also potentially some more dollar bearishness to come. So I am overall bullish. However, that's a very flimsy or a very weak bias at the moment, because obviously we need to see how the data is going to continue to come out, but we are hitting a level of support down here. I think actually I saw this, so credit to the Edge Finder, credit to the A1 guys. I saw this in their Telegram. I don't really look at the 4 hour anymore on the dollar, but we do have this little support here. So we may come back down, start retesting the decade trend line, or even reject right here. If we do reject here, fine, I might have to market execute slightly lower, but either way, I'm looking to get into a pound dollar short, and as always, backed up by the Edge Finder here with a very nice score of -9, very bearish. So all of the factors at this moment are saying to short pound dollar. So we'll see how this goes. Fresh haircut. I appreciate it, guys. Thank you. And Luca. And Cabby, wow, you guys are making me feel good. I've got a wedding to go to tomorrow. The wedding isn't actually tomorrow, but I've got to go to the venue tomorrow, the best man. So, you know, I've got to look fresh, but I can't outdo the groom. So, you know, it's a hard life when you just look this good sometimes. I'm joking. But yeah, this is the last time I'll be on this week. So I hope you guys will ask some questions if you do have any. What's everyone's opinion on crude? My friend, unfortunately, crude is really outside of my scope in terms of my knowledge basis. However, I can give you what I can. The Edge Finder is relatively bullish. Now, I mentioned this yesterday, so I'm not going to repeat it too much, but this is just my personal rule. I filter out trades. So we obviously have neutral on the Edge Finder, which is pretty much a score of 4 or +4 to -4, and that's just where the economics aren't really given enough to give you a bullish or bearish. However, my personal idea is I don't pay attention to 5 either. So whether that's a +5 or -5. And the reason really is just because if we have one flip in a bit of data, it's going to send that trade back into a neutral zone, and then that makes that trade invalid for me. Whereas if we're looking at something like pound dollar, which is -9, we can afford, and again, this is just on the scoreboard I'm talking about, we can afford to have something flip against the trade idea and it still be a bearish reading. So that's just my view. So oil, in terms of direction, is getting a bullish reading, but it's nothing overwhelming. It's got a score of 5, so it's just above neutral. It's tricky because I'm not really sure what's going on the oil picture right now in terms of OPEC, supply and demand, or anything like that. However, just from a technical view here, it looks like price wants to come back down into this next level of support, which is around 60.6. The reason I'm saying 60.6 is because this is also towards the bottom of this Bollinger. Now, daily time frame here, 200 Bollinger Band can be very useful to start to look. If you're wanting to be bullish, you could look to catch that bounce off this 200 and maybe something like this. So I would be looking more towards the bullish side, but again, I would take that with a grain of salt because it's not my main asset. You know, oil is kind of something that I leave on the sidelines. If there's something overwhelming, something that catches my eye, fine, I'll look at it. But on a day-to-day basis, not that interested. Swiss yen, good setup buy. Yes, actually, I'm looking to get into Swiss yen and Euro yen as well. I'm actually going to move Euro yen up here. Same with Aussie yen, pretty much all of the yen pairs. Just before I go into those, I am in New Zealand yen at the moment, which is looking a little bit shaky. I'm roughly break even on this whole position. I've got the initial position here, scaled in here, so it's break even at the moment because obviously this one's in profit, this one's in drawdown. But we are coming into our 200 daily moving average as well as the 50 moving average here. So there are still some factors that could support this trade to go to the upside, but we did have cooler inflation for New Zealand not too long ago. But anyway, back to what you said about Swiss yen. It's mixed. So the reason I'm not saying that it's too high to buy is just because I've been saying it's too high to buy pretty much for the past 1 to 2 weeks, and I've missed a large amount of this move. And it's the same thing with a lot of yen pairs, similar to Euro yen. Actually, not Aussie yen, I don't think, but yeah, Euro yen's done the same thing where it's just broken above the Bollinger and continues to push higher. So whether we're just going to have a minor pullback into the most recent low here and then continue higher, it's definitely possible. If you're a short-term trader, I'd be looking for something a bit more like this. However, because I'm more of a long-term focused trader, I'm looking for more of a swing trade. I want to see price come back into this all-time high, have a small mean reversion, let the 200 moving average catch up a bit, and then I'll be looking to be a buyer in this market. I just can't allow myself to get in because if I enter here, where can my stop loss be? Well, according to my rules, which is my stop loss is basically, to simplify it very much, it's just below the previous low or above the previous high. And here, my stop loss really would have to be 728 pips, which is just way too much for me. So yeah, currently no go. But again, if you're an intraday trader, a scalper, I'd be looking to be a buyer around 183.391. How do you supply and demand? Very simply, really. So I'm going to be completely honest with you. I have no idea what the difference between supply and demand and support and resistance is. I know that people call them different things. I'm not sure if there's actually a reason or if it's just different terminology for the same thing. But I've always just said it's the same thing because from what I've seen, you know, it basically is the same. However, technically, you would define a support and resistance by highs and lows, really. So this, in my view, is a resistance, but only because it's an all-time high. If this was sort of a normal market and this wasn't forming all new all-time highs, I probably would just ignore this. But the reason I'm paying attention to this is because, again, I'm looking for this break and retest to then confirm that we've turned from resistance to support. However, you know, that's, I guess, if you're new to trading, that may be a bit more complicated than what you're asking for. This is a great example of a resistance here. So you can see price formed this high and then came back up multiple times and rejected, then finally broke above. So the general rule, I guess, you could use for support and resistance is if it's touched the same level 2 times or more, then yes, we've got a support resistance on our hands. Then in terms of actually using it, goes back to what I just said here. I'd be waiting, obviously, depending on if I'm a buyer or seller. If I'm looking to buy up this level, then I'm waiting for the break above, and then the retest, and then the continuation. If I'm looking to be a seller, then I'd want to see the break down, a retest back up, and then the continuation back to the downside. So yeah, that's that. Euro yen is exactly the same as Swiss. Well, pretty much the same idea, not new all-time highs, but I'm looking for a retest on the previous resistance level at 165, pretty much on the dot, actually, at 165. That would ideally also allow the 200 moving average to catch up a little bit, and then we could start looking to take this market a little bit higher, possibly back into all-time highs around 175. I think that could be a relatively strong idea. What's your view on New Zealand US dollar? You're short New Zealand dollar. Okay. I'm automatically leaning more towards a short, and that's because I'm kind of a bull on the dollar, loosely a bull on the dollar. And as I said earlier, we had cooler inflation in New Zealand that seems to have hit a little bit in terms of the interest. So yeah, I'd be looking to be a seller, I think, in this market, but I'm just trying to figure out how, because my technical rules here really are just screaming a buy. So I'm in a position now where I have two mixed ideas. So fundamentally, I'm actually relatively bearish. Technically, I'm quite bullish, actually. And the reason I'm bullish here is because we've got our moving average cross, where the 200 is now below our 50, indicating that the trend is bullish. We've also got this relatively nice support, again, right on this 200 moving average. So technically speaking, this market looks like it wants to go higher. So with that in mind, maybe I'd look to be a seller at these previous highs, and sort of just play it like this and just see how that goes. Take profit, depending on how optimistic you are, you could have a take profit down here. It's around, let's say 0.565, just for ease. So that's the idea there. However, the dollar is very tricky right now. If you're wanting to be a dollar buyer or a dollar bull, really the main things are obviously the upcoming news. So the reason we had huge dollar selling, and again, I've covered this topic so many times, I'm not going to do it too much today, but I just want to quickly recap it. The reason we had this huge move to the downside was due to multiple things. We had recession fears, we had the trade war or economic uncertainty, we've had poor data from the US, we had front running of I'm stuttering so much today, of Fed cuts. Now, obviously, we had good data for the US in terms of CPI and the labor market this month. So that priced out some of the rate cut expectations for July. However, the ones for September are still there, and there is still arguments to be made to be a seller on the dollar. So until we have next month's data like NFP and the rest of the labor market data and more inflation data that might confirm that the US dollar or the US economy might be a little bit better than expected, then we could see some more shorts unwind. But until then, the dollar will remain pressured, in my view. So we might see a slow climb, or we might even just see a slow decline, and then the pop once we do start seeing the recovery. So a little bit of off topic there, but hopefully that might give you some insight. I consider supply and demand the high and low of legs. Okay, that makes sense. So I guess you're not marking up every typical support and resistance like I would. So, okay, I get that. Valid supply and demand zones require a big move away from the area. Okay, I get it. That makes sense. Demand is the floor, supply is the ceiling. Yeah, okay, so it pretty much is just support. It doesn't matter. It doesn't matter. It's all irrelevant. What do you think about dollar yen? James went off the rails again. Yeah, I'm not sure I was ever on the rails, but I appreciate it. I think dollar yen is, I'm sounding very flaky today in my analysis. I understand, so I do apologize. However, I'm just telling you the way I see it. Dollar yen, I'd love to be a buyer. I think that currently dollar yen is primed to go higher. The rates favor US. It favors investors to be long dollar yen right now. The Bank of Japan literally cannot hike rates. They're in a very, very tricky spot when it comes to their interest rates position. So, yeah, dollar yen longs are making a lot of sense. However, just a quick caveat to that is once the Bank of Japan starts seeing better data that can allow them room to start hiking rates, then I'm going to be very bearish on dollar yen. I think we're going to see a huge carry trade unwind, even worse than what we saw last year. Not as quickly. It won't be as violent as this, but it will be a bigger move in my opinion. Now, for the technicals at the moment, similar to what I saw, was it oil that we said this or something? I can't remember. We just looked at a very similar trade idea where I want to be in the opposite direction, but price is just looking like a short right now because we've bounced off this 200. The 50 and the 200 are in a bearish trend. So yeah, it's making it difficult. I might try to be a buyer here, a very, very low position size, and just see what happens, test the waters a little bit. If we start seeing some buyers step in, I'll increase position and start taking on a bit more risk. But yeah, that's my view. I'm cautiously bullish on the dollar. So any of the dollar crosses, pound dollar, euro dollar, dollar yen, take that with the same idea. Considering Powell's remained dovish, will gold come down or is there too much bullish support? Well, if Powell's dovish and we're expecting rate cuts, we can expect gold to do quite well off the back of that, Bishop. So I like your thinking, but it's just it's a little bit of the wrong way around. So if we do get a Fed cut in July, we're going to see gold do very, very well. However, the likelihood of that is very, very slim. And let me just show you the CME watch tool. Bear with me. Yeah, here we go. So it's it's pretty much guaranteed we're going to get a rate hold. Look at this. 97.4% probability that we get the rate hold in July, 2.6% for a cut. September, however, is more mixed. We've got a 40% chance of a rate cut, a rate hold, and a 58.1% chance of the rate cut. So keep that in mind. Hold on, let me just, yeah, sorting out my tabs there. Bishop, yes, that's the right idea. So if Powell just suddenly turns super hawkish, labor data surprise to the upside, inflation is okay, it's cooling, but it's nothing drastic. Things are okay, but we're not going to be cutting just yet. I think that's about as hawkish as we could get from Powell. I don't, rate hikes, it's not even really worth thinking about at the moment. I don't see a case where the gold's just going to dump. I suppose the only way that would happen, really, for gold to have a massive repricing to the downside would be a complete resolution in the geopolitical landscape. So Russia, Ukraine completely pause or completely stops, ceasefire. Middle East, same thing. Trade wars are completely done and they're calm and everyone's happy. That would be a case where, yes, gold would then have a reason to be bearish, or at least a reason to start seeing significantly lower prices. Whether that's going to happen or not is doubtful. What we're likely to have is more of something like this, I think, where gold might see a slight downturn here, just continue in this sideways range. Then once we head into September, and we might get worse dollar data reinforcing that September rate cut and getting that priced in slightly more, then gold can start appreciating higher. That's a rough view. Obviously, you can sort of take that and bend it to whatever expectations you might have. 100 points on NAS. Oh yeah, big cat. Wow, look at that. Crazy. Well, Sean, have fun trading this 15-minute. Dow might be the one that we focus on today. So we'll see about that. But yeah, I think I'm still in my view that I'm very mixed on gold. I think there are arguments to be buyers and sellers right now. Typically, in a market, you can generally say it's better to be a buyer because of X, Y, and Z, or A, B, and C. Whereas gold at the moment, in my view, it's just got too many things that are just weighing that scale to be more of a 50-50. And it really just depends on what's your view on the US. So what do you think Powell's going to do? Are you optimistic on the US economy? Are you optimistic on the dollar? If you're not, then fine. But if you are, then, you know, you've got a position there in gold, or, you know, vice versa. But you get what I'm saying, hopefully. Oh, also, how's the audio? I realized that my audio settings the past few streams have been set on AirPods, which are obviously pretty poor quality. I've just plugged my mic back in, so hopefully this stream should be a bit better, or sound a bit better. Hey James, how do you manage your risk? What's your risk management? What's your risk per trade if you set up multi? Okay, good. I'm very simple. It depends on the trade itself. So this trade here, New Zealand yen, was meant to be a carry trade, or a long-term trade benefiting from the swaps and obviously also the macro divergence. So this trade, I put 1% risk on. And that's because I had full intentions of scaling in, which I did here. So currently I've got 2% risk, and 2 to 3% is kind of where I max out my risk. However, on a position like, just trying to find a good example of sort of a normal trade, I guess pound dollar here, I'd be happy to put 2% risk, just flat 2% stop loss on pound dollar here. And this is because I don't know, really. I guess it's just how I feel about the trade. It's how confident I am in the idea. So 2%, fine. If I lose 2% on my idea, completely fine. However, if we get something like this where we start trending down, I can start trailing stops and I can start adding in. Again, that's if the trade is still very, very high probability at that point. But then obviously I've got a different strategy, like euro pound here, which is dollar cost average. So these positions are very, very, very small. So my mental stop is here. If this stop loss is hit, my plan was to lose 1.5%. However, I actually messed up my lot size on this last position here. So I'll end up losing around 1.8%, which is still completely fine. Again, my sort of cutoff point is around 2 to 3%. So I used fixed lot sizes. So each one is a fixed lot size. Again, I did mess this one up. I clicked sell before I checked the lot size, but it wasn't too bad. But yeah, my risk is very, very dynamic. I don't have always 1% no matter what, or always one lot no matter what. I am very fluid, really, with the markets. Audio sounds okay. Good. What's my view on Euro AUD and Aussie New Zealand? Good question. Let's have a look. So what did you want? Euro AUD and Aussie New Zealand. Euro AUD is bullish. Aussie New Zealand's not here. So automatically, that's just a no-go for me. I've got no interest in Aussie New Zealand. However, Euro AUD could maybe be something. Let's have a quick look. Yeah, okay. Actually, seems quite straightforward. It's a very, very clean trend, actually. It's maybe a bit too clean, which, you know, might be a bit of a problem, but let's not overthink that just yet. So if you're looking at the edge finder, you're looking at the trend, something like this might just be as simple as you could go. However, if you're a bit more conservative, or you're happy to wait, I'd be looking for a bit more of a pullback, again allowing this 200 moving average to catch up, and then be looking to enter on this pullback. So that would be my approach, but overall, or in general, I'd be quite happy to just be a buyer here. Traded gold today and closed at 28 5 to 1. A 28 5 to 1. What does that mean? Best trade ever. Sucks it was only on my funded account challenge. I mean, it sounds good, but wait, so you risked 1% and you made 28.5% return. Show me the method, man. show me the way. How much is your mentorship? That's crazy. Jokes aside, congratulations. That is an incredible return. Now, what I just want to say, because I don't know how many people are watching this stream. I can't see. I don't know what all your skill levels are, and this isn't any disrespect to you, Carlos, because that is an amazing return. But I think a big thing people see those types of results, whether, you know, it be on Instagram or Twitter or whoever it may be from. They'll say, oh, I made 10% on this trade this morning, or I made 28% on whatever, and they'll have like a, you know, 5 pip stop loss, and they'll have a crazy run. It's not generally repeatable, or it is repeatable, but the payoff then is an incredibly low win rate. And again, Carlos, I'm not talking for you, I'm talking generally speaking. And obviously the reason for that is when you have a 5 pip stop loss, for example, and you're targeting, you know, 50 pips, 100 pips, the chance of that market then moving 100 pips before it moves 5 pips against you and it stops are incredibly thin. So catching those huge trades obviously can happen, but generally speaking are quite difficult. So, and the only reason I'm mentioning this is because I see traders all the time on social media. They generally look like new traders, and they're always on like the 1 minute targeting huge R&R trades. And again, I'm not saying it doesn't work for everyone. I'm just saying that generally what I see and the sort of probabilities behind it, I guess the maths behind it, is not quite as glamorous. But again, Carlos, I just want to say I'm not taking that away from you. Again, it's incredibly impressive. Congratulations. Hey bro, how can I manage my psychology as a swing trader? I'm start a swing trading since last 2 to 3 months, and I took a trade. I watched multiple times in a day. How can I manage? It's tricky. I don't think there is anything I can say, to be quite honest, that's going to fix that, because it's trading in psychology is like a do-it-yourself thing. You know, I could sit here for the next 2 hours and say, you know, it's all just pixels on a screen. You only risk what you want to lose, or you only risk what you can afford to lose. Trading takes time, blah 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 blah. But next time you're in a trade, you're not going to be thinking that. You're going to go right back to your default thinking, and the only way you're going to be able to build up that psychological resistance to whatever it may be, whether it's patience, greed, FOMO, or whatever, is just by doing it. You know, it's like saying, how can I build a house? And someone telling you exactly how to build it, but you don't have the bricks, you don't have the cement, you don't have the foundations, you don't know how to lay out the architecture or build blueprint. It's a very, very individual thing. Obviously, building a house is not an individual thing, but hopefully you get the analogy there. But I think, generally speaking, is just try to forget. The way I really got comfortable with trading is I would put position sizes on that I didn't care about. So, you know, I'd go for a swing trade, and the whole trade, you know, if I hit take profit for 2 or 3%, that might buy me a coffee if I was lucky. And that the reason I did that is because I didn't care about the money, I cared about the trade. So it gave me such a disinterest in the monetary value that was going up and down. I was more focused on, is this trade going to work out? If it does work out, why did it work out? How is my analysis? How is my execution? And it was more that process. Hello, James, you get a haircut? I did indeed, Royal. I appreciate you noticing. Look away, don't feel your plan. That's exactly it, Bursey. I think, and you know what? I've said this so many times, and I'm going to say it again, because I think psychology in trading is kind of BS. And I know some people that, oh no, psychology is 80% of trading. No, it's not. It absolutely is not. Psychology, and this is the brutal honesty, brutal honesty from my point of view. You only become psychologically stable, if you will, in trading once you trust your system and once you understand what's going on. So let me say it like this. You could give your friend, your grandma, your grandfather, your father, mother, you could give someone your strategy that you spent 5 years developing. You know the ins and outs of it. You know what interest rates are. You know how inflation works. You know everything. You know as much as you need to know about the markets to be comfortable, happy, and profitable. You give everything word for word to someone else that doesn't trade or has never traded. They will not succeed. And it's not because of the strategy or anything, or the psychology necessarily. It's because they haven't traded the way you traded. They don't have that real experience in the markets. And you telling them, oh, an interest rate is this, it doesn't give them the confidence they need. It doesn't give them that experience to say, okay, I might just lose $500 on this trade. That's okay. I know over, a year, 6 months, 2 years, whatever it may be, that this does work. And I do understand what drives markets. Whereas the other person might sit there and say, okay, well, I just lost $500. I need to make that back to make my rent. Or I'm never trading again because that $500, I needed it and that was horrible. You know what I mean? I'm not sure that really made sense, but hopefully it did. It made sense in my head. I'm not great with putting my thoughts into words, but hopefully you get the picture. Royal, yeah, you too, my friend. Hope you enjoy it. I'm not sure. Let me just check the schedule. I don't know what times I'm on or what time I'm finishing today. Okay, it seems like I'm the last person. So that's. Can you explain your favorite trading pair? You know what? Personally, my favorite thing to do, and I'm not joking. This might sound like a joke. It's not. I'm being 100% serious. My favorite thing to do is to go to Eurodollar and just sell. I just sell. So during this, for example, sell. Same thing with Euro Pound, although I like Eurodollar more. And the reason is for a few things. Because if you get your position sizing small enough, the drawdown doesn't bother you. I mean, obviously you've got to manage risk. You get paid positive swaps. The mean reversions can be very, very mean. And it's just a very, very good currency to mean revert to the downside. So if you look at the historical moves of Eurodollar, let's say 9/11, GFC, COVID, I can't think of any more off the top of my head, but all of these massive events, a lot of the time, I don't have the stat actually in my brain right now, but a lot of the time they favor Eurodollar to the downside massively. So that's one thing. The euro doesn't like to appreciate that much anyway. So one of the things we looked at it yesterday actually together in a Credit Agricole report that I can't remember who it was. I can't remember if it was investors, clients, or the ECB, but there is concern around the value of the euro right now, and not just the value, but also the time or the speed that it's appreciated so much is a concern. Really, it can go towards 1.2. And then it's going to start becoming a problem. So there is that. I just love Eurodollar. I think it's really one of the easiest pairs to trade, whether you day trade it or swing trade it or dollar cost average like I do. I think it's got some great qualities in terms of its price action generally is very predictable. It's very sort of bread and butter. It mean reverts. The fundamentals are very, very obvious in terms of, the Fed and the ECB or Europe and the US. Everyone kind of has some sort of inkling what's going on there, or at least you should do, especially if you're in the financial markets. So yeah, that's that. US tariffs on EU. What do you mean? Has there been a development, or are you just saying that? I've got no Bloomberg notification. So I'm going to assume you're just saying that for something. Oh, are you saying that's maybe the downside in Eurodollar? I don't know. Anyway, let's move on. I'm just trying to think if there's anything else left on the watch list that I've not already discussed. I'm still looking to buy NASDAQ. Where's the edge finder gone here? Yes, NASDAQ still bullish, score of 12. It's almost the highest score it could be. So I'll love to see that. But again, similar to Swiss yen, Euro yen, it's just too high to buy. I really need to see a retest of these previous all-time highs before I could justify being a buyer. Euro CAD, we did consider Euro CAD longs, but I just had a feeling that I didn't like it. So I've avoided it for now. I might jump in eventually, but right now it's not. I'm just not feeling it, if that makes sense. Dollar yen, maybe if we could see some buyers start to step into this market around 146.5, I'll take it. But for now, I've got no interest. Euro Swiss shorts, I quite like. I think if we could start seeing the dollar Appreciate. I do think we have a lot of euro long positions that need to be unwound. So I think euro Swiss could be quite a nice position, especially if we break out of this range to the downside. But again, that's not a great idea that I've got. It's just sort of there. Copper, love to be a buyer on copper. Dollars are what? Is it still there? Let's see. I think it might have disappeared. Okay, well, there we go. No longer interested in dollars are. So dollars are was a bullish reading on the edge finder, but that seems to have disappeared. So I've got no interest in that. On gold, I'm looking for either a pullback for me to get long or a break and retest higher. And that's pretty much it. Oil, not really too interested. If we could start seeing some buyers stepping into oil, I will take it. It's got a bullish reading on the edge finder, but the technicals right now are giving me a little bit of spooks, so I'm just going to sit on the sidelines for now. Oh, you're adding to my historical events. Okay, Bishop, I see. What's my take on EU? I think EU will come down. We were looking at this yesterday, and the rallies in euro-dollar seem to repeat pretty what's the word? They sort of just work the same way. So we rally, reach the top of the Bollinger, pull back, continue a rally slightly higher, consolidate, then pull back. Rally, reach top of the Bollinger, pull back, range, and then downside. Here, rally, Bollinger, pull back, and then maybe this is the range before downside. However, this is all good and well until, you know, we need to have something to really drive that move. I can't sit here and say I'm comfortable taking shorts euro dollar just yet. The technicals I think are really, really nice for a mean reversion. But yeah, I need to see some more clarity in the US because I've been very bullish. You know, I was bullish on the dollar since the 30th of June. So it's been almost a month and I've been pretty accurate. I mean, it's only been 2 weeks, so you know, I don't want to be disingenuous here, saying, you know, I caught the bottom of the dollar because the bottom might not be in yet. However, the price action so far this week, yeah, I'm not confident. So yeah, I'm just on the sidelines for now. But I wouldn't, even if euro dollar does start rallying higher, I won't be a buyer. It's too stretched. I think we need to see some sort of pullback before it becomes attractive to buyers again. Currently getting crushed on DAX. What's DAX doing? Let's have a quick look. Yeah, DAX is having a bad day here, isn't it? Terrible, terrible day for DAX. Let's see what's going on. Let's look for longs in pound Aussie, and Edgefinder shows it's bearish. Can we have a look at it, please? We absolutely can. Let's see. Wait, so what did you want to do? So you want to look for longs, but the Edgefinder is bearish. Edgefinder doesn't look bearish. I don't see it. Unless it's got like a -4. But again, if it's -4, I generally just avoid it. Okay, so it's, I don't know. I'll be honest, I'm mixed because the UK economy is in a mess. The UK is really not good. And that makes me want to be a seller. However, it seems like the RBA is relatively dovish and the overall trend here is to the upside. So you could bet on the trend sort of continuing, and this is just a breather for the traders. But again, without an Edgefinder reading, I'm kind of just sat with very little interest here. New set of tariffs are due to take effect on August 2nd. Yes, Bishop, I would expect that also. However, the Europe seems to be defending themselves relatively well. There we go. The UJ debate has been a minute. It has been a minute. For anyone that doesn't understand what he means, this guy and myself we've got a bet on euro dollar. We don't have a time frame, which makes it difficult. But He bet me that euro dollar will be back to all-time highs. I said it's not going to happen. I'm still standing by it. However, I am looking to be a buyer short term, then get back into sells once we start getting better data for Japan, and once tariff stress releases, because obviously tariffs have played a big role on the central banks recently. Pretty much just wait and see. So yeah, I'm looking to be a buyer for now. But yeah, don't get it twisted. I'm still short bias long term on dollar yen. Aussie Swiss, what's your view? Tell you what, we'll do. What time did I come on this stream? Hold on, let me just check. There's a new schedule, so I'm a little bit taking time to get used to it. So what were we talking about? Aussie Swiss. Right, let's have a look. First of all, check the edge finder. Aussie, wow, very bearish reading. Score 11. Let's see. So automatically, want to be a seller. So well, of course, I'd want to be a seller here. However, you see here how we've had very nice pullbacks into this 200. Since this drop, we've not had that. We just chug into the downside, but we're not seeing any pullbacks to this 200. I think that is due. The 200, the way to think of it, this is why I always talk about it, it's like a magnet. So it's not, I do agree that indicators are relatively useless to an extent, but when you're looking at Bollinger Bands or a 200 moving average on a daily time frame, they do become very relevant. And I think you can see that, even just here, it's like a magnet, if you will. So I would like to see price come back to this 200, reasonable pullback, then continue lower. So that's pretty much the only thing. I couldn't justify being a seller here. I think it's too low. Target would very clearly be, I mean, that's a terrible line, but very clearly be at, let's just say 0.5, roughly, give or take, in the 0.5 area, I think would be good to go. Okay, I'm going to start calling it a day, because otherwise I will be here all day, just covering charts. So we'll quickly recap gold for Carlito Sam. My gold view is very neutral right now. Higher time frame, so on the daily, we're just stuck in this range, really. I think there is an argument to be a buyer and a seller. You could argue that pretty much everything's priced in. No Fed rate cuts in July. The Fed rate cut in September is still pretty much 50-50. But then you can still argue that all these things are still ongoing. Middle East tensions are still there. Russia-Ukraine's still there. The Fed will cut rates eventually. So there is an argument to be on both sides. The way price is moving today does make me inclined to be a buyer, but only if we've got these two situations. So we need to break above and retest and then continue, or we can pull back into these most recent lows and then continue. If we pull back into, if we start breaking past these lows, likely we're going to end up back in this support. But yeah, I mean, I completely understand anyone being a buyer or a seller in gold right now. Sahil, no problem at all. Okay, guys, I think we're going to call it a day here because I do have some things to take care of, but it's been a pleasure. As always, you've all been great. I appreciate every single one of you. So again, this is the last time you'll see me this week. I've got to go and take care of some business. Not really, going to a wedding. But guys, I will see you all next week, hopefully, if I make it back alive. Don't get margin called. I appreciate all of you. Have a good day. I'll speak to you soon.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.